The Road Accident Fund has, for the first time in decades, recorded a major coup. The Transport Minister Fikile Mbalula gave an update with regards to major strategic developments at the Road Accident Fund to record the scheme's financial viability. RAF's turnaround strategy has managed to reduce a backlog of issuing claims as well as reducing the turnaround time. According to Mbabula, RAF is the biggest liability after Eskom. However, Mbabula added that RAF's determination and hard work to turn the situation around has paid off. To talk more about this is Mr. Letsoalo, who's the CEO of the Road Accident Fund. A very good evening to you, and thank you so much for speaking to us. So I believe that RAF and yourself have something to celebrate, including the board. RAF has reported annual deficit since 1981. By 2005, the fund's annual deficit had risen to 1.2 billion rand, but now there is a surplus.
Good evening, and good evening to the viewers. We are seeing good offshoots of what looks like a good trajectory going forward. We must emphasize that this is the beginning because this is year one of the 5-year strategy. Our view is that we have been vindicated in actually going and focusing on what is core and becoming claimant-centric and focusing mostly on ensuring that we put this claimant in terms of what we do first and moving away from the litigious system that we've had in the past.
Okay, we'll talk about that later on, but just tell us, how were you able to achieve this feat of a surplus? I believe this is at the center of your turnaround strategy, but if you could just expand a little bit more on this.
Look, the RAF simply collects about 43 billion a year. And in the 43 billion, we pay out claimants about 26 billion, which is about 60% of what we have. And 40% went to administrative costs. All we did is just to reduce the administrative costs. And in reducing those administrative costs with about 7 billion, we were able to achieve this surplus. But we must say that it doesn't mean that RAF is out of the woods yet. You know that we have got a big liability that we have got to deal with, which is about 14 billion as we have it now.
So was this feat also part of reducing the finance costs, which I believe you were able to do by 62%?
Yes, this is simply where we have had to make sure that there is liquidity, but also ensuring that what we needed to do was to make sure that we pay people in time. So that's what we have done. If you look at what we have done on our claims, we have been fairly consistent, and we have maintained the same number of 26 billion in this current year. So we didn't do that by reducing the number of payments, but we just made sure that on the cost side, we reduce what it cost us to actually pay out that amount.
So you mentioned earlier on about applying a legal strategy and stratification of the debt book. Tell us a little bit more, expand on this.
Well, the stratification of the debt book was where we have got to look at pockets of people that are owed within RAF. What we found out is that in instances we would be owing someone 2,000 days worth of outstanding claim that they've been settled maybe about 5 years ago or something like that has not been paid. Sometimes it was 1,000, but the big law firms actually had about 30 days. So what we said is that everyone must be on the same line, so we stratify the liability properly so that the oldest debt is paid first, and then we actually went to court to get the court to allow us to pay people within 180 days to make sure that we put everyone on the same level. And that has helped a lot in ensuring that those ones who have been owed a long time are now paid. And then we then reduce this as we go. I think we are now at about 150 days.
And your short-term liability, what exactly was it and how were you able to deal with that?
We had a 17 billion, what we called requested but not yet paid, meaning that because of the liquidity position of RAF, we were not able to pay that money. We have been able to push that, and I think we've reduced it to about 14.8 billion, which is 2.2 billion less than what we owe. As I say, it's something that we are working on. We thought last year we'll go into the market to actually go and get a medium-term note of some sort to actually put in that money to be able to pay everyone out. But because of COVID, we couldn't. So it's something that we are seeking to do in this financial year. But with this surplus that we have and the reduction in cost, it surely shows the market that we would be able to pay if we go into the market and actually raise money to be able to pay it in the future with the surpluses. We should be able to pay that money back.
Okay, so we're talking about efficiency of your administration, but I also want to look at the fact that you yourselves have been able to increase your investment income, including your current assets, cash positions as well. What strategies did you employ, and was this long in the workings, or what is something that you identified as the CEO as soon as you came in?
Well, it's something that we identified as the management team here. I wouldn't like to make this about myself, but I mean, working together with the board. One of the first things that we had to do is to make sure that the liquidity position of RAF improves. But as you know, on the side of the revenue, we couldn't do much without actually impacting on South African consumers from a point of view of the fuel levy increase. So the aim was to just look at what we have. The difficulty of it is the 17 billion that we pay out in administrative fees. 10.6 billion of that was going to lawyers, which is why we said that the reduction in legal fees must be at the center of the strategy for us to be able to do that. But it was not only that. Medical suppliers are charging us 5 times what they charge medical aid for procedures. And this is something that we have also brought in to make sure that we lower the costs in line with what the market was paying. Our actuarial costs as well, in terms of determining the cost of quantum, was also high. So we reduced that. So if you look across the board, we have actually made sure that we do that. So once you have that, you have got money in the bank account that you can actually go and invest and try to get a bit of yield here and there.
Okay, so you might have a good story to tell, but the Road Accident Fund is still experiencing a fund backlog. I think it's 80% of claims that are incomplete.
Yes, as we say, I mean, part of what we wanted to do is just to make sure that the backlog of about, as we say, it takes about 5 years to settle those claims. So for us to move into a model where we do this thing within 120 days, the first thing was to deal with that backlog. When we went and tried to deal with this backlog, we realized that 80% of some of those claims did not have enough information for us to make to assess merits or be able to make a quantum determination on that. So it's something that we have been working towards getting that information, but we also, going forward, are putting together what we call minimum information requirements, which is now going to also be part of our new RAF form that we released on Friday in Gazette.
Let's talk about compliance. How are you going to ensure that South Africans comply with the Act, and in addition that the Road Accident Fund also reviews regulations and is able to effect changes timeously and speedily?
Look, the issue is that our model was quite skewed towards litigation. So what would happen internally in RAF was that we never moved until we got a trial date, which is not what the Act intended. Certainly the Act in terms of Section 24 expected us that when you then bring a claim in RAF, we should be able to assess it within 120 days and be able to give you a firm offer, or reject it, in which case you can then issue summons. We are clearly not being put in that position to be able to do that by people that bring the claim. So someone will bring a claim that is quite empty and you can't do anything about it until that. And then usually what the legal fraternity would do, most of them would actually bring this so that they can bring summons, because once they bring summons, they're able to bill us on party costs, and we should pay that. It costs us 6 billion a year to run that kind of a model. So we have to change that to actually focus on claims administration, and this is what was intended in terms of the Act. And that is helping the claimant rather than the money, as we say, 10.6 billion, at the 6 billion going to the plaintiff attorneys as we speak today. So it's something that we have to reduce and get rid of.
That has put you at loggerheads with some of those in the legal fraternity. Have you been able to overcome some of these challenges, or was it still before the courts?
Well, it will be for the courts. I mean, it's something that we always say that those that benefited from the inefficiencies of RAF will always fight us. It's a known fact that there are different industries that have been built around the inefficiencies of RAF. And we see it with hospitals, we see it with medical providers, we also see it with lawyers. So it's not something new. But we have been given our marching orders by the minister and cabinet, and that's what we're going to be doing.
Thank you so much for your time. Letsoalo is the CEO of the Road Accident Fund. We're going to take a quick break. Do stay with us.